Hey, thanks for coming in today and joining me in this webinar. No matter what you do today, I've got a couple really key things I want to talk to you about that I really believe will help you with your investing in the financial markets and help you to build real wealth. I've been doing this now since the mid-'80s, and we have seen some incredible roller coaster markets where people have made tremendous amounts of money and then lost it in all kinds of markets, not just the U.S. stock market, but the commodity markets, gold markets, international markets, and real estate. And I've learned some key lessons throughout all this that I believe you need to take away and apply yourself. No matter what you do today, you can use them the rest of your life. So let's get on with the presentation. The thing is, our country is going through tough times. People are suffering financially, and those that have a lot of money don't know what to do with it. It's tough. Mutual funds aren't doing shit. Stockbrokers, investment advisors, they've run out of ideas. Very few people are making their clients any money. The tough truth is, like I was telling you, over the past 13 years, most people in the United States have been trapped in a giant boom and bust cycle that just keeps repeating. It's like they've been riding in a car that keeps hitting big speed bumps, making their stomach sick, making them throw up. Well, I want you to do something now. Think back to the late 1990s when many people rode the stock market higher for the very first time in their lives. It was an exciting time. I was a part of it. A lot of stocks went up. A few people got rich in the internet bubble. I was getting my start from it all. But a lot of people got caught holding the bag after it popped. I was lucky to get out in March of 2000 and recognize what was coming, but unfortunately most people didn't. Most people thought they had made a lot of money in their portfolio in the 90s, only to see it instantly go down the tubes with the rest of the stock market. Then the Fed lowered interest rates and printed money big time. So the stock market, it bottomed in 2002, and then it went up for 5 years. During that time, a new bubble formed in real estate that trapped millions of people. Some people try to make money flipping houses or buying interest-only mortgages, thinking that real estate just goes up forever. These people lost their heads. So when real estate prices topped out, they got crushed. And so did stock market investors. Remember 2008? The stock market crashed again, and things have not been the same ever since. The stock market's gone up since 2009, but the past couple years, it's had these big corrections periodically that have hit people hard and caused them to lose their confidence, and for good reason. I'll show you something. The average American's net worth declined by over 40% from 2000 to 2010. Now that's going to hit you hard. It's going to make you scared. It's going to make you not want to lose any more money. So what's happened? The ups and downs of the stock market just scares people. So they've been taking money out of the market recently and putting that money into money market funds. It's crazy though, because they're getting zero interest. See, this is my most recent data. People put $56 billion into money market funds, paying them nothing in return, and we're still in a bull market. I know these people are trying to be safe. They're trying to escape the ups and downs of the stock market because they're scared of another crash. They don't want to suffer again like they did in 2008. They don't want to feel like that ever again. But the thing is, they're taking a big risk because if inflation blows up, they're going to be totally screwed, trapped in CDs paying them nothing. The problem is people simply do not know what to do. They don't know how to really invest. Instead, they get greedy and they react to the big moves in the financial markets. They chase after the next big thing, and they buy when it's too late. They bought real estate at the top. They bought internet stocks at the top. They bought bank stocks at the top way back in the mid-2000s. They never learn from their mistakes and get caught up in this boom and bust cycle all over again and again. And the thing is, it will happen again someday. But I'm telling you, Don't give up. Don't just hide in CDs. Don't just hoard your cash. Real wealth can be made in the financial markets if you have the right attitude. You got to focus on what you're buying and what price you're really paying for something. That's the key. Instead, most people just focus too much on making money and end up getting caught in stock market traps by chasing things. They make things difficult for themselves. They just look at short-term market moves. And now so many people burn themselves so many times they're just giving up and are willing to accept zero interest in return for the money to prevent themselves from experiencing another bust. They are making a huge mistake. I'm telling you again because I want you to realize that. And I'm going to tell you the trick is not to focus on making money. It's a little bit of a paradox. What you need to do is focus on building real wealth, to grow your assets and not just grow your money, not grow your bank account, not look at the dollars, look at that real assets you got. It does absolutely no good to hoard money, especially if an inflation debt bomb hits the country. I don't think it's going to happen tomorrow. I don't think it's going to happen next month, not even next year, but it can happen within 5 or 8 years from now. Money is good for one thing either way, no matter what happens. Money is good for one thing. What is it? Spending it. It's not good for hoarding. It does you no good sitting in a CD paying you nothing. So do not focus on building up money. Focus on building real wealth. Money is a tool to that end. The funny thing is building wealth is so much easier than trying to make quick money. That's what I learned. I know from my own experiences. Let me explain this to you so you can understand what I'm talking about. It's a shift in mindset here that I'm really trying to hammer home to you. When I first got into the stock market, back in the go-go internet stock days, when I could literally buy a stock and watch it go up 100% the next day, and then like 2 or 3 years before zero, but that's what was going on. But I was trading with the mindset of making money, right? I wanted fast money, as they say on CNBC. And it was a tough game. It worked a little bit, but that kind of stuff doesn't work too well anymore. And I had to adapt. But the thing is, when I first started doing this, I didn't know any better. So I would jump in stocks and try to make a return within just a few days of time. And day trading was popular back then. People were doing speculation stuff and options and futures, just chasing all kinds of stuff. But I was successful at doing this, and I managed a hedge fund for a few years, paralleling my success into doing that. And when I did that, I felt like I had to make money every single quarter, or the investors in the fund would be disappointed. So I had a lot of pressure on me. And even though the fund did well, one year, in fact, it was in the top 35 of all hedge funds ranked by hedgefund.net. It was so stressful for me that I actually shut it down. I was like a hamster running in a wheel. Thing is, if you manage money for people, I wrote about this in my strategic stock trading book, you have to make money all the time because that's what people want. And if they make money, they feel like they're in control of their destiny. And that's what they ultimately want, even though that's kind of a fleeting thing. You see, that's also part of the appeal of short-term trading, the idea that you can just buy something right now and sell it and take the money. So you make money and you feel this short-term gratification, but it's very, very tough, and most people fail at it. And it's just they keep chasing after some system or something that can give that for them, with the idea that if you can have some sort of short-term trading system that can make you return every week, then in theory you'll feel like you're in total control of your life. But it's just a theory, because real life doesn't work that way. But we live our lives chasing rainbows, or most people do at least, until you clear your head. And the truth is, it's human nature, because, look, we're all going to die one day. So people spend so much time trying to distract them from that fact. They accumulate castles in the sky. They use the drug of watching television or drugs or alcohol. They just look for ways to distract them from the fact that they're not in control. And trading, for some people, they're attracted to the idea of trading because they want to feel like they are in control. But once you accept the fact that you aren't, you can shift your mind and stop focusing on the short-term gain, stop focusing on making money, and focus on building assets, building true wealth that you can transfer into money when you want to. So here's the thing, if you go to the stock market with this idea that everyone has that you're going to use it to make money or make money for others, you're going to find out that the illusion of control isn't going to happen. That's what I learned. I found out that the stock market ended up controlling me. I had to match the expectations of the people in my hedge fund that were investing with me. And the short-term trader has to sit there, and he needs those money-making trades all the time so he can feel good about himself, so he can feel like he's in control, so he can show his friends or his wife or his significant other that he knows what he's doing. And then when he fails at it, he feels like a failure. And then the masses, they end up riding the big booms and the big busts over and over again. And they end up in a situation where they're glued to their accounts. They have to watch them all the time. Instead of being in control, they have no control. Instead of having a good time, you end up having a stressful one going down this road. That's what I learned. That's why I shut down my hedge fund about 8 years ago. I just didn't want that kind of pressure on me. I wanted a different kind of lifestyle. And it took me a couple years after that to get to the point where I am now, to learn these lessons that I really want you to know, that I'm trying to tell you today. So here's the thing about managing money. When you have to deal with other people's emotions, it just gets that much harder. Look, Stanley Druckenmiller was one of the most successful hedge fund managers ever. He took over George Soros's quantum fund in 1981 and beat the market every single year with an average 30% return until 2010. His fund was down 5% in the first half of that year, and the people he had in the fund, they revolted on him. They complained to him. They got angry about him. They didn't care about what he did before, and he couldn't take the pressure, and he just got out. Investing does not have to be stressful, though, but it almost always is for people. That's because we approach the market in a way that makes it difficult for us. And I'm telling you, it took me a long time to figure it out, but I finally nailed it. I've always approached the market in the past with the thinking that it moves up a lot and down a lot, so I want to make money by riding those moves. And I've been able to make money by doing just that from time to time and cutting my losses when I was on the wrong side of things. But it's still tough, and I wanted to make it easy. Today, I use the market to build wealth and have the type of lifestyle I really want. I travel whenever I want to. I like to write, and I just published a book this past summer. People are giving it great reviews and makes me happy to see that. But I can do these things because I have the market working for me now. I don't even think about the market too much. I'm no longer a slave to the market or have it, So now I just can work on writing more books and just doing the things I enjoy doing and having fun. And I do it with a peace of mind. I do it by building wealth instead of just trying to make money. The secret is to making investing easy. Okay, let me tell you what made me figure this out. After trading the markets for over a decade, about 3 years ago, I decided I wanted to stop having to work so hard at it. I wanted the market to work for me. I wanted to change my life. So I decided I'm just going to get out for a while. I got into some side businesses, investing my money there, and that's another story, not important for this discussion. But the key was I wanted to get out of the market and take a break from it. I pretty much did for about a year. And I used that time just to step back and just think philosophically about my interaction with the stock market, to try to come up with a simple way to reach a simple goal. And that was to make the stock market easy for me and turn it into an easy way to build wealth, real wealth. So I wanted to essentially get out of the boom and bust cycle that most people are caught up in all the time that are playing the stock market. You know, if it's not like, people just got the habit. They just can't help themselves from getting excited in tops, then riding things all the way down to the bottom, and then making the money and then losing the money over and over and over again. That's not, you know, what you want to be doing. You got to make the market work for you and not feel like you've got to work at investing. How do you get to that? Ultimately, that's the goal. That's what you want to do, to make the market work for you. Make investing easy. Here's the key. Write this down, man. Write this down if you don't do anything else today, and just think about it. Write this down. The key is to invest for real. Okay? Invest for real. People tell themselves they're investing because they buy into some fun of the idea of holding for a long time, but they have no idea what price they're paying. You've got to invest by focusing on buying with the knowledge that in time you'll make a good return on what you buy because you bought at the right price. With that type of knowledge, true knowledge, then you don't really feel stressed about the market because you're investing and making decisions with a good more amount of certainty. You're not just throwing your money at it, you know. You're not just riding a wave. You're investing in something that's real. You're not just buying into some story or believing in a theory about the way the economy should go or the stock market for that matter. That's what most people do. That's not how to invest for real. Okay? You got to invest by buying something once it has gotten to a truly cheap valuation. If you buy the right thing at the right price, then investing becomes easy. The rub is, and this is why it's hard for people to do it, even if they understand how to do it, and I haven't told you that yet. I will in a couple minutes, because most people don't really understand how do you buy something truly at the right valuation. I'll explain that in a minute, but I got to tell you, the thing is, even if people know it, most people have a tough time doing it because it's human nature to be impatient. And you can't just do this any single day. I can't just go any day of the year and say, hey, here's the greatest, cheapest opportunity in the world. I got to be patient. I got to look, and find them, right? When they come. And often to find a whole lot of cheap valuations in an individual sector or inside of an entire stock market, you need to wait till you see a big correction play out or a bear market come to an end. And those things often only happen once or twice a year. Right now, the S&P 500 is overvalued because it's trading at a cyclically adjusted P/E ratio over 24 when the level below 10 is considered to be a cheap valuation. And the truth is, there may be years before it gets to that level, and the market could go a little higher before it ever gets there. It probably will. But the problem is that right now, it's very hard to go invest in the stock market in the United States because it is not cheap from an investment standpoint. People simply can't wait for cheap valuations, though. And the thing is, most investment advisors, TV talking heads, investment magazines in the literature almost never talk about being patient. The money manager wants to turn people into clients. The clients want returns all the time. It's a cycle. So what they do, they get on TV and they talk about how it's always a good time to invest in the stock market, and they never tell people to get out. So when the crash comes, like it did in 2008, 2000, and one day another one will come, they'll tell people to hold on all the way down. But hey, look, I'm not going to hit the money managers on the head too much because in the end, it's the people's own fault. They chase over and over again. All they do is watch the gyrations in the stock market. When it goes up, they get excited, and then they react to them. They get trapped in tops. So if the market goes up, they buy. If it then crashes on them, they get out. They never think about the valuations they're getting in or out at. And they never look, most people never look for at more than one market at once. If they would do that, they would find opportunities that really worked. They never think about the valuations they're doing. They're motivated by simple fears. And the biggest fear is the fear of missing out. People cannot stand the idea of not being in something that's going up without them, especially if it's the only thing they look at. You see, this is the reason why most investors are stressed out all the time, and they end up riding these giant boom and bust cycles over and over again, never get anywhere. What is crazy, this is when the market seems to be the most enticing, is when it's the most near the top, and it's the best to stay away, that people want to get in. Human nature makes it tough for them to do the right thing. People want to feel certain, and there's nothing that makes most feel more certain than being a part of the crowd and doing what others are doing. And hey, people are afraid that if they're not in the S&P 500 or real estate or whatever it is going up, and they're not in it and others are in it, and it's the only thing being talked about, they'll miss out and feel like an idiot. But if they would just look at other markets all over the world, they'd find the opportunities that really work. But the problem, too, is when markets get cheap and the valuations are incredible, provide incredible opportunities from an investment standpoint, when those great sweet spots come, they make it so easy to step up to the plate and swing because you're hitting a fat pitch. When that happens, the news on TV is all negative about the opportunity. So most people are too scared to get in. And why is the news negative? Because all the damn money managers have written everything down. They sold out. Now they're negative on it. So look, last year, let's take Europe. Europe was supposed to be an impossible thing to consider buying. That's what they said on TV last year. Even though the valuations there became super cheap, with countries such as Greece trading with a cyclically adjusted P less than 5. I just told you a few minutes ago, the U.S. is trading now at 24. Greece was at 5 last year. It's still at 5. Well, when that was happening, I first bought Greece a year ago in the summer of 2012. And when I did it, there were riots on TV, and they said I was a fool. And now I'm still holding those positions, and they're making the value of my investment account go up. How's that happening? I'm not trading with the idea that, hey, I bought Greece, I'm going to sell it, and then I'm going to make $500. I'm going to do it over and over and over and over again. No, I said, here's Greece, here's an investment opportunity where a market gets that cheap, and all I got to do is buy into something like that at the right time and just sit on it. And that asset I've got in the fund zone in Greece are going up and up and up. So I've got assets building wealth. I can sell that right now and transform that asset into money and go spend it, or I can hold it and let it grow and grow and grow. So that's what I'm doing. I'm growing wealth. I'm building wealth. I'm creating wealth in my account because I didn't listen to television when they said not to and when the news was bad. The truth is it worked because I bought at such a low valuation that it made sense, and it made it practically inevitable that I make a good return on this investment. That's the lesson. You need to focus not on making money, but on growing the net asset value of your portfolio over time. That is how you build real wealth. That is how you really invest. And you got to separate yourself from the crowd. You can't get caught up in what they're talking about on the news, because the news simply causes most people to do the wrong thing and scares them when they should be investing. People want to feel certain about what they're doing, and after a bear market somewhere, everything in the news gets negative, so people are basically talked out of investing, real investing. Most people want a good story to buy into because it gives them comfort, and everything seems negative on the bottom. They want the news to tell them that an economy is going to boom or grow, so they'll have something positive to buy into, a story to believe in. But such news stories just don't exist at a bear market bottom, or end of a recession for that matter either. So people just chase the news and get all stressed out from the market gyrations because they keep making the same mistakes. Okay, the key to successful investing then is not predicting the future. You see, you don't need to be certain about what is going to happen in the future to invest and make a good return over time and build wealth. People think you got to predict something. They want to say, what's the market going to do? What's this going to do? How much is the economy going to grow? And this and that. Predicting the future isn't the secret to investing. The trick is to buy things when they're truly at a low valuation. If the valuation is low enough, what happens in the future almost doesn't matter. Let me say that again because it's a life-changing thing. If you buy into something at a valuation cheap enough and low enough where things make sense, it almost doesn't matter what happens in the future. And then if you buy things like that, investing really does become easy because there's not much to think about. You don't have to worry about what's going to happen. You don't need to predict anything. You don't need to worry about what the news is on a rock bottom or after a rock bottom. Now, I want to draw an example out that this is a really kind of revolutionary. It sounds like common sense. It is common sense, what I've been telling you. But no one thinks about this when it comes to stocks. They want to chase earnings growth or, the top. You just chase. They don't really look at the true valuation. So most growth stock investors, they don't even factor in the price they're paying for earnings growth. They just think earnings growth is good enough because it creates good news stories and they like that. And they don't think about the reality. The most important thing when it comes to buying a stock is the price you pay, the valuation you're paying, the price you're paying for earnings and earnings growth. That's all that matters, And let me wrap this concept around your head with an example, with a story, okay? Because I think this will really make things clear to you. Let's say you're a business person, okay? And let's say you wanted to get into a restaurant business. So you decided to go buy a small restaurant that's making $100,000 a year in profits. Let's say you go look at it, you like the look of it, you like the interior of it, and you get excited about it. You go to the owner, and the owner shows you a local newspaper story praising the food. This restaurant's so popular that it's in the newspapers how good it is. Well, now you're really excited because if you go buy that restaurant, you're going to make money. You're convinced you're going to make money. You're convinced not only are you going to make money, but people are going to like you too. You're going to become a big shot because you're going to own the most popular restaurant in town. This is awesome. All right. So the owner offers. You ask about it, and it's making $100,000 a year in profit, and the owner says, "Hey, I'll sell you the restaurant for $2.4 million." Well, you can't believe it. You can't believe what you're hearing. You didn't think the owner would sell it to you for anything, but now he's going to sell it to you for $2.4 million. Well, you're so happy that you tell your wife about it, and the two of you go run to the bank, and you get a loan from the bank for $2.4 million. And you go buy the restaurant. And you tell your friends what you're doing. And they tell you, wow, that's neat. Everyone is happy for you. And a lot of people, it's obvious to them that you're doing the right thing. Gotta be. I mean, this is exciting stuff. So word gets around of what you've done. And you get into your restaurant. And you're running the business for a week. And you got a lot of friends, and more people actually come to the restaurant and start eating. Your word of mouth spreads. You've done some changes. You added some new dishes to the menu. Your business is growing. People are happy when they come in there and eat, and they like talking to you. They like seeing you there, and you're happy. Your wife's happy. Your family's happy. But you got one little problem. After a couple months, you sit down and you look at your statements. You break down the numbers and you realize, oh my God, I owe so much money to the bank. I owe the bank $2.4 million. And you realize that you paid a giant price for this business. You realize, oh my God, no wonder why the owner sold it to me without trying to talk me to a higher price. And you realize I'm barely making anything for what I paid for this. I'm not making nothing. I should be, everyone likes me, but I just, I'm not really getting ahead, and I'm in big debt. And then all of a sudden, one day comes, and you notice, you look at your books again, and there's less people coming in the restaurant. You haven't done anything different, but what's happened is the economy simply slowed down in your area. Other businesses have shut down because of a new recession. Maybe some factories have shut down. People have moved away. You're making less money now, and now you're not making enough to cover your payments. And now you're bankrupt. You're wiped out, you're ruined, and all you got now is a sad story. You've ruined your life. And you just got friends now that look down on you and they feel sorry for you. Well, you've hurt your family. Well, what happened? In this story, what happened is that you paid a stupid price for the restaurant. You were a complete idiot. You paid 24 times earnings for the business. All right? $100,000 in profit, remember, a year? And you paid $2.4 million. That's 24 times earnings. Well, let's go back to the S&P 500. What's it trading at? A cyclically adjusted PE ratio of 24 times earnings. 25 times earnings means that it would take 20 years of profits for you to buy back the restaurant or to buy back the businesses represented in the individual stocks that as an aggregate make up the S&P 500. Now, in this restaurant story, you went bankrupt not due to the bad luck of the economy. You can blame it on that. That's what you would do. But the reality is you went bankrupt because you paid a high price for the restaurant. If you got in at a cheap price, it may not have hurt you at all to have less revenue coming in. But at the time, after you immediately bought the restaurant, people told you that you're buying something neat. But no one thought about the price you paid for it. Just like television in the stock market. It feels good to buy stocks. It feels good to be an investor in the S&P 500, to be to be a part of the investment class and have people praise you for your foresight. But no one talks about the price the market's trading at. That's why when a real person, a real business person goes and buys a piece of property, of real estate property, with an idea of making it into a rental property investment, they pay around 8 times earnings. They look for that as a maximum price to pay. At 8 times your earnings, in 8 years, they'll have paid off the property if they took a loan out for it, basically, and from then on can make a lot of income from owning the property. See, this is what investing is really about. It's about buying something at a low valuation that can help you build wealth over time. You've got to think smart. That simple. Bear markets and big corrections create opportunities to do this in the stock market. But to do it, you have to be patient enough for them to appear. You can't just be chasing markets simply because they go up, and you have to be an independent player who isn't just doing what's hot in the news. You also got to look at multiple markets all over the world so you can see one of these things line up, and it happens just about every single year somewhere. And the thing is, it's not hard. If you buy a stock or even an entire country through an exchange-traded fund for that matter at a low enough valuation, then you do not have to worry about what the economy is going to do in the future, what the news is going to be, because you bought in smart. Then investing becomes easy. How do you do that? It's simple. Wait for a bear market to cause valuations to get super cheap somewhere. So, for example, last year the stock market in Greece crashed as the Greek government went through a debt crisis that caused their bonds to crash so much they paid over 30% interest. People thought they would default on their debts, but they didn't. Their stock market crashed, and Greek stocks fell to valuations so low that they're ridiculous. I wasn't paying 8 times earnings. I was paying 4 and 5 times earnings, and there's still opportunities like that. I bought a stock symbol HL Toy, Hellenic Telecom, which is the largest telecom company in Greece with operations in Eastern Europe, at close to 4 times earnings. I also bought GREK, GREK, an ETF for the entire Greek stock market for around 5 times earnings. At the time I bought it, it only had a market cap of $10 million. People only had $10 million in it, and now they've got over 40 million, close to 50, as it's gone higher. Now, I would have a tough time going in my car and finding a local rental property with such a low valuation, but I can find that in the financial markets and use that to build real wealth over time. Just as a good rental property bought cheap can be a great asset for you, so can a great stock bought at a low valuation too. Now, like I was saying before, at the time I made these decisions and told people about them, the news about Greece was terrible on TV. The country had been in what you would call a depression for several years, and people were rioting in the streets. People told me investing in Greece was too risky, but I didn't listen. I didn't care what they said, because the thing is, no matter what the economy was to do in the future, people there are not going to stop using electricity. They're not going to stop eating food. They're not going to stop living. They're not just going to die. So when you get in at a valuation low enough, it practically doesn't matter what the news is going to be in the future, what happens. So you don't want to predict anything. You just buy when most are too afraid to invest, and you sit on what you buy when you get in right. Sure, the Greece stock market has had some ups and downs for months at a time since then, like all markets do, but I got in so cheap that those little dips and natural corrections that comes in a bull market haven't mattered to me at all. I am building true wealth in this investment. And the same sort of opportunities came all over Europe last year, and Europe hasn't gone up so much that they're gone. They are still opportunities like that in many of the individual stocks there. And countries such as Ireland also reached super low valuations. I bought the Bank of Ireland last year, and I still own it. It's still going up. And it's working for me because I bought around November, I think it was last year. It's just up, 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 and up. So I'm almost up 100%. And I don't have to, when you're up so much like that in a stock, if it's down a day 2 or 3%, you don't care. It's easy. And recently there's been a giant debt crisis in Cyprus. The stock market there has fallen over 95% in the past few years. Now, there are no Cyprus stocks that trade in the United States, so there's no easy way to play that, but someone can get on an airplane right now, fly to Cyprus, open a brokerage account there, invest in that country, and beat just about every hedge fund expert in the world over the next 10 years. It's a lot easier to beat the market doing something like that than trying to outplay some crazy short-term computer trading program robot that these guys are using. Personally, I don't approach the stock market with the idea that I'm trying to beat it, because that forces you to obsess over what the market's doing today or next week or over the course of a month. I don't care what the S&P is doing, because what I really care about and what works is building wealth by investing at low valuations. I do not expect to beat the market every single month or every quarter, but in the long run, I'm confident that a real investment strategy will do it. You see, to invest like this, you have to stop worrying about what the broad market is doing in any given month or what your neighbor's doing. Your neighbor's not going to invest in Greece. Your neighbor's not going to invest after a bear market collapse somewhere, anywhere in the world. They're just going to ride things down again when everything blows up. And this is why few hedge funds or money managers can invest like this. Most hedge funds are given money by giant institutional fund-to-fund pools of money that grade them on a monthly basis. Opportunities to invest in something at a low valuation come in a market somewhere in the world at least once a year. Sometimes they happen in an individual market sector in the United States. They happen most often when a sector or market falls so much that it's almost unbelievable. Big crashes and big bear markets bring bear market opportunities for the investor. That's because they bring new bull markets. So, how do you find something worth investing in? Well, first what you need to do is look for something that has collapsed. Financial writer Mabane Faber, he ran a study of all world markets since the 1970s using historical data, and he found out that when they fall more than 90% off their highs, they then go up on average 156% for the next 3 years. When they fall more than 70%, their average return is over 116% per annum for 3 years, while a drop of 60% brings an average return of 107%. So crash markets lead to true bargains. And the same thing goes for individual sectors that make up the U.S. stock market. So a sector that is down 70% from its high, it tends to go up 96% per year for the next 3 years afterwards, while one down 60% often turns into 71% per year returns for the next 3 years. So if you're wondering, yes, there are opportunities right now. The stock market in Argentina, for one, is cheap. Europe is still cheap and is only 1 year into new bull market. There's a few sectors of the U.S. that are still interesting. There's stocks all over the world that have low valuations and are just beginning new bull markets of their own. These are the stocks that can be used to build real wealth. And we also have gold and commodity markets that have been in vicious bear market smash-ups for the past few years and are in the process of building a stage 1 base to launch a new bull market off of. Now, I use simple chart patterns to spot these bottoms too and know when a big turning point is coming. It's a simple fact that after a bear market ends, you eventually get a bull market. If you invest after a bear market or the start of a new bull market, you can then hold and make investing easy. You get in at the right time, at the right price, and it's simple. This is the easiest way to use the financial markets to build real wealth, which of course you can then translate into money when you need it. It requires patience, though, to do this, and a faith in your own ability to believe that you can invest in these type of opportunities without first being given permission by the television set or some expert on TV. Yes, you can do it. If I can do it, you can do it too. Let me show you my real portfolio to prove it to you. Okay, this is an analysis of my real account by my stockbroker. I've also got a small IRA, but this account I've got a little over $400,000 at the moment. But this is an analysis for the last quarter, the third quarter of 2013, and I made 10.72% during that time. I actually really beat the market very handily, and I'll show you how I did it. But I've got a little bit over 30 stocks in my account. You may not need to have that many, but that's how many I've got. And I'm diversified throughout the entire world and in the sectors I think are going to do the best. So, and a lot of them pay nice dividends too. So, for example, Price Bank, that's one of the Greek bank stocks. So, Canadian Oil Sands is an energy company based in Canada, paying a nice dividend. I've got 2 mining stocks you see right there. And the biggest positions I have are in exchange-traded funds. You can see right here, an exchange-traded fund, EWI, for Italy, Belgium, Austria, Spain, and Ireland. $27,000 in the new Ireland fund, 7%, close to 7% of my account. So I'm invested all over the world in these markets that I'm telling you are still cheap, and they're in new bull markets, and that's how I was able to beat the market in the third quarter, because the U.S. stock market, it lagged these world markets. In fact, the S&P 500, you can see the return. While I made I made 10.72%. The Dow only made 1.48%. So I beat it like almost 10 to 1, and the S&P was up a little bit over 4%. But what happened was that while the markets I was in really went up, the U.S. stock market made a peak in September on the day that the Federal Reserve met and announced it wasn't going to increase quantitative easing. The S&P in the U.S. Had a vicious pullback for the rest of the month, while most of the markets and stocks I had just continued to go up. It wasn't affected adversely at all by what was going on in the United States. So I just wanted to show you what is possible when you invest the way I've been showing you in this presentation so far. And I'm also, in fact, let's see how much I made this month. I'm getting nice dividends from my investments. While most people are trapped in these CDs paying nothing, and you really can't even buy bonds anymore and get anything, I'm owning stocks and ETFs that are paying me nice dividends of 3%, 10%, 11%, 6%. Remember the Canadian oil is saying 6%. And so last month I made $2,600 in dividends, which is awesome, and I make those kind of dividends all the time. So this is what's possible, and I think that you can get results like this yourself. In fact, I can't think of a reason why you can't do it. So yeah, I think you can get results like this yourself. In fact, I cannot think of a reason why you can't. Can you? Yes, you can do it. And yes, I can help you do it too. I have a small private investors membership area of my website. It's called Wall Street Window Power Investor. In this members only area, private area, I share all of my trades with people. It's called Wall Street Window Power Investor. And whenever I make a trade, what I do is send out an email to the members of it, telling them what I buy, and then when I sell, I do the same thing too. Today you can join it. Just go to your internet browser and type in wallstreetwindow.com/powerjoin.htm. It's only $97 a month. Now I know you see lots of stock picking services all over the internet, but I'm telling you, I do something much different than you see anywhere. Most people will make a recommendation and then they'll run away. I give you my real trades. I talk about my real portfolio and my real holdings and show people what I'm doing and what I'm thinking, and I just don't buy something. I tell you when I sell too. So once you sign up, you'll get an email when I buy and sell a stock in my main account. I'll show you how I use these stocks to manage my real portfolio, how they work together to build real wealth, how I control risk. I'll also send you every week a PDF report with my thoughts on the financial markets and where I think the next big opportunities are coming. I'll show you the stocks I'm researching as potential buys before I ever even buy them. And you won't be alone anymore. The Power Investor membership is not just a service where I'm yapping at you. It's a group. Every month I hold a live webinar in which I go over what is going on in the markets, the easiest way to make money, and answer any of your questions. You can just type me an email or speak in the Power Investor member webinars that I do. So if you got a stock you want me to look at, I'll look at it with you. And if you can't join the live webinars, if you're a Power Investor member, you can watch the replay, or you can send me an email with your specific questions. We're going to play this game together, and we're going to win at it together. I want you to succeed in financial markets and build real wealth, and this service is the best thing I can do for you to achieve your goals. I put it together just for you. I believe so much that I can help you that today I want to do everything I can to get you to join my Power Investor service. You have no excuse to join, and I want to make it that way. I believe that after you sign up, you'll look back 6 months from today and see this moment as a key turning point in your investment life. Most people experience the stock market as a lonely and scary place that ties their stomach up in knots. From now on, you're going to become confident and invest with peace of mind. So along with this membership, I'm going to give you today for free my Stock Market Mastery course if you join today. If you look on the internet, you'll see people selling trading courses just like this for over $1,000. It consists of 7 educational modules with videos and PDF files. The first one is about trading psychology and will show you how to begin to invest with confidence. Now sign up today and I'll give you this course for free. Now I know what you might be asking yourself. I know you might be wondering, why would I do that? Why would I just give you this course for free when I could sell that to you also? Well, here, the answer is simple. Because now is the time to get you to join. It's time for you to act. And with what is going on in the markets right now, I want you to join right now. I don't want you to miss out what we're looking at next in the market. It's that simple. It's time to stop looking outside the window in. I want you to get in this and get my next trade. So go ahead and sign up. Your charge will only be $97. You'll then be charged $97 every 30 days until you stop your membership. It's less than the cost of a cup of coffee a day, and it's probably less than what you pay for your cable bill and your phone bill. Now, I use a safe transaction processor. It lets you use PayPal or any major credit card. ClickBank sells our products. They're a trusted online retailer specializing in digitally delivered products which will refund any customer, quote, according to their terms, requesting a return within 60 days of purchase. What this means is that if you ask for a refund from them within 60 days of today, all you got to do is email them or hit their contact form. They'll give you a refund with no question asked. Well, I guess theoretically, that means you could work the system here by buying and joining today, getting the course, and then just refunding and keeping everything for nothing. But look, I ain't worried about that too much because I'm sure you're going to like what you see once you get in, and you're going to stay a member because you're going to want to stay a member because you're going to get so much out of this. So much more than, the little cost of it. So this sets up a situation where you really have no risk. If you don't like what you see, you can get your money back. Look, when it comes to the stock market, what you're seeing here is the bargain of a lifetime. You know that I've given you better information for free than what most people charge for. And I work even harder for the Wall Street 1.0 Power Investor members, which you'll see once you join. This is essentially a high-level stock market investing coaching program just for you with my ideas and my specific trades. I'll be working for you after today. You're going to get everything. Now is the time to join. Don't wait. Go ahead and take action today. Now is your moment. Your future begins right now. Now, before you go, I want to thank you for taking the time today to be a part of this webinar. It wouldn't work without you and the other people that have been here. It's been a lot of people. It's really took me aback when I started, and I see some people. I'm looking at another monitor, and some people are already getting in, and that's exciting to see. Once you get in, what will happen is that you just type that URL, and of course, if you haven't done so already, but go type that in your other browser, and you'll see a really short page with a repeat of some of the information I've already told you about what you're going to get in the service. But you click join, and then you go to the order form, and once you fill that out and submit your information, you'll instantly go to a confirmation page where you're going to give us or give me your email address. And what that's going to do is put you on the list of Wall Street Window power investors, the private email list I have to contact you and the other power investor members for when I put out new information. And you'll also see on that page the password to access the Power Investors section of the website. So with that, once you get it, you can just go to wallstreetwindow.com, click the Power Investor login in the top right, and use that information to access the members area if you want to see the archives. And you're also going to get emailed to you the various modules that make up the Stock Market Mastery course over the next couple weeks. You can access the course, of course, all at once if you log into the Power Investors area, but I also have it emailed out in small chunks so you can do it slowly. So you have a choice of consuming the information in that course all at once if you want to, or you can in fact ignore the course if you choose, or you can do it slowly. So it's all up to you how you consume the information that you'll be getting, and I'm looking forward to communicating with you and so forth. So it's going to be fun. We've got exciting times coming, and it's going to be fun to have you a part of it. Well, that's going to conclude the webinar, and I'm going to leave this screen up for a few moments so you can see the URL and type it in, and that's it for today. See you on the other side.